Alright, gentlemen. What's up? Welcome to episode 3 of my trading academy. Okay, everything's rolling good. Okay, so today, let me switch. Today I want to go over how the market moves. Market moving. Kind of like basic order flow stuff. So, in the market, this is what I want you to write down. This is like the one thing I want to write down. The market moves to liquidity, and the market moves to take liquidity. So, I really just want you to think. I want you to think of liquidity as the asset or underlying index you're trading. So, like NQ, for instance, is an index, but I'm trading NQ futures, so index futures, right? It is resting orders that need to be filled at a price similar to what it's at right now. So obviously, when I say similar price, I don't mean like right at this price, but something that's not liquid would be like right here. If I wanted to purchase or go long or go short this asset or a contract of this at 22,246 and 50 points, it's not really liquid, it's illiquid, but look, it is resting liquidity. So the main thing I want to tell you is that liquidity, the market moves to take liquidity because there are buyers and sellers on the market, and for every buyer there's a seller, and that's the whole reason. When someone's going short, the other guy's going long, someone's losing money, the other guy's taking it, the market moves just like that. That's exactly why it moves. So that's why I just want you to keep in mind, that is why the market moves in zigzags. That's why it's not straight. It just goes in zigzags. Just remember that. That's why, because it's taking orders, and that's how the market makes money. If it just moves straight down, wouldn't mean anything. Also, why you need to be using candlesticks and not a line chart. If you're using a line chart still at episode 3, you need to fucking switch off that shit. If you don't know how to, click this, click candles. Okay. So price action refers to price in the way it's moving. So price as it's moving. So up, down, up, down, up, down. Price action really just refers to that. It's also known as PA for short. And price action moves to take liquidity. Price action moves to take liquidity. Okay. Why aren't you fucking locked in, bro? Why aren't you fucking locked in? You took so long to not do something you said you were gonna do. You took so fucking long. All you have to do, and to this day, you work a job that you hate probably, or if you don't work a job, you're probably unhappy. A lot of people are unhappy these days. You're unhappy because you're putting yourself through it. You're not actually trying and applying yourself to things that matter. So I had to go off on a tangent there. All right, time frame alignment. So I want you to remember that the market is trying to take liquidity on a higher time frame usually. That's fine. So if I go down to the 1 minute chart, each one of these candles is 1 minute. We've went over time frame in one of my previous episodes. So this right here, if I'm like, okay, I think the market will go up or I think it'll go down based on a confluence, which I'll get into what confluences are shortly. You can't really say exactly, I think it's going to go down, I think it's going to go up. It's kind of a gamble on the 1 minute. You have no idea what the market narrative is, and narrative is pretty important. So I'll actually write that down. Narrative is just what it sounds like. It's like the story the market's telling you, why price action is moving the way it is, and what it's trying to go for on a higher time. That's the narrative. So every day when I wake up and I come to the market, I first try to identify what is the market trying to do. So if we look right here, I'm gonna turn that off. If we look right here, we can see price has had a big move upwards, right? A big move upwards. Okay. This is the resting liquidity. That it's called buy side liquidity because it's on the top side. Buy side is up here, sell side is down here. Okay, so just based on this, what does it look like price is reaching for? Does it look like it's going to go down here? Does it look like it's going to go up there? It's pretty basic shit. So usually one of two things happens when price is coming up on liquidity. it either skyrockets and scalps it, or it barely fails to take it. So look at something like this. This is a confluence, which is good. This is, you get used to just reading price action after looking at the charts for so long. I know this might be a little going over your head a little bit, but just think of it like this. Price is coming down a little bit, and then it's coming back up right here. It beats this, but the thing is, this is the main like resting liquidity. Okay, this right here isn't really resting liquidity. This is just a displacement candle. Displacement meaning it just moved, like it just tanked or it just rose, okay? And then it failed to take this. Once it failed to take this, obviously paired with other confluences, because you're not going to know if it's going to take it. It's just going to be moving up. It tanked. It tanked. That's a bearish indication, meaning you think it's going to go down. Bullish, you think it's going to go up. So based on that, you can see it failed to take this high. That's very indicative that it's going to tank. Goes down. It consolidates for a little bit in this zone right here. This is called consolidation right here. This right here, it's just up, down, up, down. It's not really doing anything. And then it, ooh, let me delete that. And then it tanked. Failed to take a high again. Came up a little bit, tanked. Came up, tanked. Came up. Failed to take this liquidity, tanked. Failed to take this liquidity, tanked. Now there are times in the market. Price action's been really good lately, but there are times in the market where liquidity will get swept on a higher time frame, and then it can still be bearish. So for instance, we will look, see, look, this one failed to take this one, etc. It comes up, down, up, down, up, down. And it's called higher highs and higher lows. If you zoom out a little bit, you can see there's a high here, a lower low, a lower high, a lower low, a lower high, lower low. That is, as I've explained in my last video, that is a bearish indication. A lower high and a lower low means it's going down. It's trending downwards. We went over trends, remember? And bullish would be higher highs and higher lows. Now, sometimes it might fail. This is what I'm trying to explain. It might fail a little bit to take it and come down a little bit and then come back up like this. And that is an advanced method that you can identify. It's called a turtle soup. We can get into that. We're going to get into that during the turtle soup video. But basically, my point is that the narrative is me right now on a higher time frame on the 1 hour chart, looking at what the market is trying to tell me. So usually you can zoom out and see that there's resting liquidity. This is the daily chart, so this is really high time frame shit. You can kind of see what price is reaching for. So price could still be reaching down. We've had a huge move down. It could retrace back up and then tank again. It's been very bearish lately. But you're not going to trade on the daily or the 1 hour. But you look at these to look at your narrative on what you think price is likely to do. If price is close to something like this, it may not entirely take it out, but you can expect, not always unless there's called a market structure shift, which we'll go over as well. But right here, we have a high, a lower low, and then a high. If it failed, the market's closer now, but if Monday morning or Sunday evening, if it comes up and fails to take this, is a good sign, one of the good signs that it could go down. But the problem is, people who don't day trade, they look at narrative and think they have it all figured out. Narrative is just a piece of the puzzle. Trading is like a giant, big jigsaw puzzle. You have to look at every single piece. And if you miss one piece, you're out. You're not going to make it. You're literally just gambling and guessing. But narrative is super important. Every day when I wake up, right? Fucking, oh, let me show you fucking Kyle's morning routine right here. Oh, man. Oh, I'm fucking tired. These fucking charts. Let me pull up fucking trading view. Oh. Boom. I pull up the fucking daily chart. The daily chart is the first thing I pull up. I look, okay, well, obviously this past like week and a half, 2 weeks, we've been pretty bearish. We have these little white displacement candles, or it'd be green on your screen, that kind of come up and come down, and it's been retracing downwards. This will probably eventually retrace. But you don't know until you see the narrative, because the narrative is just one thing. So this isn't daily bias. This is just really high time frame bias. The high time frame bias is very bearish. The 1 hour, my favorite. Same here. This is one of my favorites to look at. Okay, perfect. Then what I do is I drop down to the 15 to look at a more intraday narrative, meaning during the day. So this is starting here. This is Wednesday the 12th of March right here, okay? So each one of these candles is 15 minutes, so it's still a high time frame, but you already know on the higher time frame we're bearish. We come up right here, we're doing a lot of consolidating on a high time frame. That doesn't mean there's not money to be made here. And that's where the idea of scalping comes in. But you have the 15-minute here, and that's what a lot of day traders do. So you have the 15-minute here. We look at this, kind of looks iffy, so it's not, doesn't look like crazy high probability right now. But you're going to have move downs with moves up. See, just like on the 1 hour, there's a high, a lower high, a low, a higher low, right? A lower high, lower low. There are times where it will take it. Like this low right here took these. That's called manipulation. But you also have to remember that this shit right here on a higher time frame, where'd it go? 12th March. I don't know why it's not showing up. It's around right here. On a higher time frame, it doesn't really matter because we're still making that general trend. You get what I'm saying? So that's why I'm saying you have to make sure. It's called time frame alignment. Time frame alignment. That's why you have to make sure that you focus on what is the high time frame trying to do. That is like, okay, so we went over like the bias on the daily and the 1 hour chart, and then there's daily bias, which is like the intraday bias, which is like what is the program we're in. It's an algorithm, so the market's either in a buy program or a sell program almost every time. So you're either going up or going down or kind of staying the same. So we are right here in a buy program, but that's intraday. That is from the Thursday the 13th of March all the way through till market close on Friday. But we're still bearish. So price could still come up and take this high. Let me show you an example. This high right here, this liquidity, that took out this high. That's a bullish indication, right? So you get what I'm saying? It can get confusing, but that's why you have to pair it with confluences, and you can't marry a bias. Do not marry a bias. Write that shit down if you're going to write fucking anything down. This is something that I've struggled with a lot. A lot. Marrying your bias. If you marry your bias, you're going to get fucked. If you come into this thinking, okay, well, it looks like we might have some sort of reversal here because of this. Yeah, I could be right. You don't know, but you're just marrying it too much. You're thinking too much just about narrative. So you come up and you're like, okay, cool. It looks like we're going up, and then we go up. Let's say we fail to take this high, and we come. This is the high, and like Monday morning, this just fucking tanks, and we start going straight down. If you're bullish that whole time, you're swimming against the tide. So what you'll be thinking to do, if you're bearish or if you're bullish, is every single time the market comes down and it comes up right here, you're going to go long. Right here or right here, you're going to go long. And then you're going to get stopped out. Your stop's going to be right here. You're going to get stopped out. Your take profit's going to be down here. You're not going to hit the take profit. So it's going to run through your stop and go like this. It's still going to look bullish again. It's going to come up. It'll take this high, so you're like, oh, we're definitely super bullish, and fail to take that high, straight down. Now, if you're bearish here, it makes complete sense because you never married your bias. That's why it's super important to never marry your bias. Because if you're bearish, that's why you have to pay. My point is that's why narrative is important, and that's why time frame alignment is important. High time frame is going to speak in a louder volume than a low time frame. The low time frame is for entry. Just remember this. I'm going to write this down for you. This is very fucking simple. Okay. All of these work. This right here, take a screenshot, do what you need to do. You want to use when you like step by step, just as far as like trying to figure out if you think it's going to go up or down. This is what you need to be doing. It's simple. You don't need to overcomplicate this shit. Use the daily, the 1 hour, and the 4 hour chart for high time frame bias. So daily, okay, cool. It looks like a reach in here, whatever. 1 hour, 4 hour. But mind you, on the daily, it doesn't really matter so much about these big moves. So you're not. It's gonna take. It would take like a week of a really bullish week to take this high. So you're not really thinking about this high. Just have it mapped out. You're thinking at the more. You have to think of the more recent liquidity. So this is a recent high on the daily. This is a recent low on the daily. Okay, so it's reaching towards this liquidity. Could be a bullish indication, but we have to see it take it first and then close above it to have some sort of market structure shift. But we're still bearish. We're still very bearish, so we don't really know that yet. 4 hour and the 1 hour are also great. You can see it's like a little bit more of a zoomed in version of it. But then when you go down to the 15 minute, you don't really give a fuck about that shit. You already watched it and did it. You need to do it in that order too. So you're like, okay, cool. You look on the 15 minute. Okay, cool. It kind of looks like whatever you think, right? And then 5 minute, okay, cool. It kind of looks like whatever you think. And then it's like, okay, cool. Now I'm going to pair it with confluences. And confluences I'm going to have to make several videos on because there's so many. And then I'll boil it down to my strategy and what I do once you know and learn the confluences. But confluences with narrative, with high time frame bias, is the key to trading. That's exactly what you need to do. Aside from that, I think that's everything. Real quick, I have a free community right now if you guys want to join it. I brought it up in other videos. It's up to you if you want to join, but it's not going to be free for long. We are going to make it paid at some point here soon. We're currently at 167 members. We have daily meetings. We talk about lifestyle. We talk about goals. We talk about, we have weekly goals that we do. We do trade recaps every day. We do a little bit of brain rot, and but it's okay. It's a great community of great people, and we all think like-minded. And I'm going to tell you right now, as someone who, when I was getting into trading, learned completely by myself and didn't really have any mentors or anything like that, it's a lot better to learn from me than it is to not learn from me. And I'm going to tell you right now, if you can do that for free, now you can get that opportunity for free to join some sort of community or something, like our community or another community if it's free. It doesn't matter what community you join. I don't care. At the end of the day, I want you to be successful. So that's why I'm trying to tell you this, because we're not going to keep it free for long. We will start charging. If you join while it's free, it's going to stay free for you. You're going to be an OG member. We had 1 month ago, we had 30 members. Now we have like 167. It's been growing really fast. Really fast. Just from social media, people reaching out saying, hey, I'm interested in doing this. And I promise you right now, this is some sort of scammy shit. I've seen a lot of other people's courses where they do scammy shit. We are just a community, a lifestyle. We do cars. We're actually, someone had a great idea last night on the meeting to do a book club. Not everyone's into books, but whoever is interested in the book club, we're going to be reading a book, and we'll be going over and talking about and discussing that book every couple days on it, which is great. Like I said, we talk about really anything lifestyle related, but we do trading for work, so we usually get work out of the way because business first. That's what we do. We just get that shit out of the way. So, yeah, but like I said, I've got to plug it. I got to tell you, I'd feel remiss. I'd be very remiss if I didn't tell you. It is a free community right now. You will keep that free status. You won't ever have to pay if you join now. But there's no telling. I mean, it could be next episode when I release this shit that it's paid. We have no idea yet because we're just kind of going with the flow. But, yeah, that's really it. I just wanted to make sure I let you guys know that. But aside from that, follow me on Instagram and TikTok at Kyle_ES_. That's such a weird name. I traded in Q. I don't know who the fuck did that. But Kyle_ES. Follow me on TikTok and Instagram. I post a lot of shit on there regarding gym, community. If you don't want to fully join a Discord or commit to a Discord, this is a more lax way of showing your support or even just asking me questions. I respond to DMs, PMs all the time, and feel free to comment down below. And if you like this content, please subscribe and leave a like. All right, guys, thank you so much. Y'all have a good fucking rest of your day. Peace out, boys.